makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Paris, and these are your top stories. Donald Trump broadens his trade salvo, threatening some of America's biggest trading partners as he promises 25% tariffs on steel and aluminium imports. The dollar rises, but stocks mixed in a muted response to Trump's latest tariff threats as traders assess the impact. Plus, shares in BP jump after Bloomberg reports activist investor Elliott has built a significant stake in the struggling British oil giant. Now, first thing is first, let's look at the markets. It's quite interesting to see the muted response so far as, again, traders and markets across the world try to really digest some of the things that Trump tariffs mean for the respective economies. Now, S&P futures, you can see gaining some 0.3%. We're seeing similar gains across the board. Now, it's very clear that some of the response is actually beneficiary to gold, so there's a bit of a risk-off mood. We also look at iron ore specifically. If you look at iron ore and aluminium, they moved on the back of Trump imposing that 25% tariffs on steel and aluminium. And then the other thing we watch out for is, of course, dollar. So the dollar index, you can see 1,303. And then we're seeing a bit of a lift up for some of these commodities, including iron ore, and then gold, increasingly popular, as it's always a good hedge against everything else that's going on in the world. Now, President Donald Trump plans to impose 25% tariffs on all imports of steel and aluminium into the U.S. The move broadens his trade salvo and threatens ties with some of the country's top trading partners. So let's get more with Laura Cooper, global investment strategist at Nuveen, Rosalind Matheson, Bloomberg's EMEA news director, and Brendan Murray, who heads up our trade coverage. So thank you all for joining us. Ros, maybe let's start with you. What did we learn overnight? Because there's a muted market reaction, it seems that markets, if not given a heads up, were certainly prepared for something of the sort. Did it surpass our expectation, or were we pretty much in line with what we thought the president would do?
Well, it does fit that broad pattern of a sort of patchwork, really, of tariff announcements by this new administration in the US, but also a pattern where stuff gets announced and then maybe it gets deferred or it gets altered. And maybe that explains a bit of the market reaction today, because we actually don't know a lot of detail. We don't know when this is supposed to take effect. We don't know, for example, on China, does it add on to the 10% tariff that Donald Trump has already announced on China? Are there going to be exemptions for certain countries in the end that are negotiated out of this? So there's a lot we still don't know about what this might look like in the end. But obviously you can see from the key trading partners, the level of concern about this, including, of course, Canada, who really is standing to get hard hit on both fronts, steel and aluminium. The interesting thing, of course, is this extends the message that Trump will put tariffs on you even if you are considered to be a US ally. So he looks at allies and adversaries in the same way when it comes to trade and business. And it doesn't matter if you're Germany or Japan or Canada or China, he might still take action against you either way.
So, Brendan, who's going to be hit hard the most? I know we've seen, a move, for example, for Australian dollar. I mean, there are countries and companies that will suffer more than others.
Yeah, exactly. I think Canada is really the main target here that stands to lose the most. If you remember, in the first Trump administration, the steel tariffs are 25%, the aluminum tariffs were 10%. The president said yesterday that the aluminum tariffs are 25%, and Canada is really, a key exporter to the U.S. So we'll have to see. As Roz mentioned, there's a patchwork of trade policies being rolled out. The president deferred the 25% tariff across the board tariffs on Canada, so this bakes into the negotiation that's gonna take place. The other issue is, how will the European Union respond? That there is, as we've reported, a list of U.S. products that they will retaliate against. So the Europeans aren't saying much yet, because this was just it wasn't a formal filing of tariffs, but the Europeans will most definitely respond in a way that would target some key U.S. industries.
Brendan, I mean, it seems that it's very difficult to retaliate, because Donald Trump has also said if you retaliate, we'll go even harder on you. Does that change how you negotiate?
Yeah, definitely. The last time around, they targeted the Europeans targeted industries like Harley-Davidson motorcycles and bourbon and Levi jeans, kind of all-American products. This time around, they have a lot more tools to go at the U.S. with, and they've said that they've told us that they plan to use them, and they plan to use them quickly. So we could see this escalate, within days or even weeks.
Laura, why are the markets so cool about all of this?
Well, I think what we're seeing is these kind of confluence of headlines really just adds to the uncertainty facing market participants. And I think why we're seeing such a muted market reaction is because markets are incrementally becoming less sensitive to these headlines. I think markets will want to see actual outcomes on the back of this. It's not clear what the exemptions could be, whether we could see this as just a negotiating tool to get a deal. So I think at this point, markets are waiting to see clear outcomes amid this uncertainty.
So it's not that it's priced in, Laura. It's basically that they just want to make sure that they go in place instead of some kind of deferral or negotiator.
And I think one of the reasons why we've seen some equity markets outperform the U.S. year to date, which has been quite surprising, predominantly European equities, is in part because of this benign inflationary backdrop. So on the back of these steel and aluminum headlines, perhaps Europe is next in the sights. And I would suggest that that's going to potentially challenge some of this European performance that's really been underpinned by this kind of tariff benign backdrop, but as well these robust earnings coming through that aren't factoring in this tariff risk yet to come.
Roz, when Trump was talking about U.S. government debt, was he talking, when he talked about U.S. basically irregularities with treasuries, was he talking about government debt? It's unclear to me what exactly he meant.
That's right. It is unclear because he was referring to treasuries. He was talking about problems with treasuries, whereas you can see that Elon Musk and his Doge group have been focusing on the infrastructure, on the payments networks of treasury, be it for contractors or for grant programs, not really talking about debt itself. But Donald Trump did refer directly to Treasury. So is he talking about something else that he thinks is happening there and about the way that debt is issued with Treasury? Because he was talking about debt not being as big as everybody thought it was. So it's a little bit unclear what he was talking about with that. And it's also a question of where does Doge begin and where does Doge end? We know they've been poking around in the cupboard at Treasury. They are facing several legal challenges to their ability to gain access to information and what they do with it. But the concern has been, what is this all about? Is this about sussing out certain payments that go through Treasury and changing those? If so, in what way? Or is it something more fundamental about the way that debt is issued and the market functions? And that's really where you've seen the incoming Treasury Secretary Scott Bessent come in and try and reassure, no, we're not mucking about with that. But these kind of comments possibly just feed again into those concerns.
Yeah, I guess that's something that, markets will wake up and try to understand and figure out what that means. Laura, I mean, with things like this on treasuries, again, it's really impossible for the moment to markets to react. But could there be a government event, maybe even untied to this, if there's too fiscal spending and we're not sure where the trade goes from here?
Well, I think that's one of the reasons why we haven't seen a strong bid for treasuries despite this uncertain backdrop. We have seen U.S. rates rally since mid-January. That's largely been dominated by, a benign CPI print. We did have that softer than expected services inflation. But I struggle to see the 10-year yield really break out of that range-bound 4.5% range. I think potentially this week, if we do see a softer than expected CPI print, perhaps tactically we could see that 10-year trade down to the 4.25% mark. But I think in this backdrop where the fiscal uncertainty remains unclear, it's unclear what some of these policies could yet come through. I think that's why we're going to struggle to see investors bid for the long end of the curve in the U.S.
And Brendan, what do we know about U.S.-China? I mean, this is probably the most complicated but important relationship for the rest of the world.
Yeah, exactly. So, the 10% tariffs that President Trump put on China last week were quickly retaliated against in a way that a lot of analysts thought was more measured than China could have done. But China then went to the WTO and said the U.S.'s 10% tariffs are not legal in an international sense. So that seems to be a slower brewing trade war with a much more longer-term consequences. So what we saw from the U.S. was an across-the-board tariff. If you're in a supply chain industry right now, you're recalculating what your costs are. They also blocked the de minimis loophole, but then took that back. So there's a lot of sort of fits and starts with this in the early 3 weeks of this administration, and they're not really understanding some of the repercussions of them, and they're kind of having to backpedal in some instances.
Yeah, and Roz, what do we know? I mean, on the ground, so we have J.D. Vance, the first time that he actually arrives in a European capital. I'm in Paris. He arrived about 20 minutes ago, and we're expecting him also to stay right across from where the Bloomberg office is as he attends this AI summit. Are we expecting, we also have questions about whether Donald Trump is speaking to Vladimir Putin. But if the vice president is here in Europe, are we expecting any more sanctions or any more friction with the EU, or will they hold off?
Well, it's interesting, as Brendan was saying, the EU is taking the tactical approach to sit and wait, and obviously not wanting to poke the bear by coming out today with something strong, but, you know, prepared for what might ever come down the track. So waiting to see some clarity on what Donald Trump was talking about, but, you know, ready to respond this time as needed. It'll be interesting to see J.D. Vance in the region commenting, obviously, on AI, and that's something that's very much front of mind for Donald Trump, but also the relationships in the region. We've seen some in, you know, Donald Trump's inner circle quite willing to comment, for example, on the status of German politics ahead of an election in just a fortnight there, but also a lot of talk, obviously, around Ukraine and whether Donald Trump did, in fact, speak with Vladimir Putin, when, if so, possibly it might be that this is this November call that was rumoured before Donald Trump took office, but obviously, again, pointing to the idea that Donald Trump really wants to get traction on Ukraine. He wants some kind of ceasefire agreement sooner rather than later on Ukraine. And ahead of the Munich Security Conference coming in a matter of days, is J.D. Vance going to be also pushing on that while he's in Europe?
Yeah, so interesting. Bloomberg's Rosalind Matheson, Brendan Murray, of course, our trade czar, and Laura Cooper from Nuveen. We have team coverage. Laura stays with us, and we'll talk a little bit more about Europe competitiveness. Now, shares in U.S. Steel jumping in pre-market trading. That's after a closely watched summit between President Trump and Japanese Prime Minister heightened uncertainty over Nippon Steel's plan to acquire U.S. Steel. Now, the leaders said that Nippon Steel may also make a significant investment in the U.S. steelmaker, instead surprising investors. And you can see pre-market U.S. Steel some 8% higher. Much more to come, and this is Bloomberg. Now, President Donald Trump plans to impose 25% tariffs on all imports of steel and aluminium into the U.S. Let's bring back Laura Cooper from Nuveen. Laura, thank you so much for sticking around. We were talking about the fact that the market is a bit in a wait-and-see situation. Is there anything that you would buy right now? Given all of the uncertainty, do you go to gold? We're also talking the fact that actually treasuries didn't really get the bid that they used to in these kind of occasions.
I think there's still attractive income if we look at the short to the belly of the curve in the U.S. But I think what's becoming interesting is that we are seeing this divergence trend becoming entrenched. And that's when we look at the growth and inflation outlooks across Europe relative to the U.S. Signs of the U.S. exceptionalism still persist, but yet in Europe, the risks to growth are tilted to the downside. And so to our mind, there are still attractive opportunities looking across the European government bond space, predominantly in German bonds, but as well the periphery, in a backdrop where we think the ECB is going to have to continue to ease policy rates, potentially below that neutral rate, whereas the U.S. is clearly on an extended pause amid this policy uncertainty.
Laura, what's your take on Europe right now? Again, it's been such a lagger in the past, and it seems that it could be quite beat up because of Trump policies. Is there anything that you see as attractive right now?
Well, as you mentioned, I mean, sentiment has been so depressed in Europe. It's one of the reasons why we've seen investors flock to European equities so far this year. And this has been supported as well by a favorable earnings backdrop, predominantly if we think about healthcare and financials. But we think that this is still a challenging environment despite these attractive valuations, in part because of this tariff uncertainty. So probably staying away from that healthcare, industrials, really those components that are going to be most vulnerable to tariffs, but instead looking for pockets of defensive sectors. And as well, energy, we think, is going to continue benefit from a structural trend around the electrification of grids, and even in the technology space, with semiconductors continuing to benefit from that automation trend.
Laura, let's also bring in our Brussels bureau chief, Kevin Whitelaw. Kevin, when you look at the relationship between the U.S. and the EU, it has been pretty fraught. There's big speculation that extra EU tariffs could come as soon as this week. I mean, does that make sense timing-wise? J.D. Vance is here in Paris, and then he goes to the Munich Security Conference over the weekend.
I mean, Trump is going to do everything on his own schedule, and he does like to do shows of force. So it's very possible that we're going to see it whenever Trump wants it to. And having Vance here and doing it while he's here is Trump showing that he's not scared of anything, and he's not, he's ready to take on Europe, at least from his view. So I do think European officials are bracing for something. They've been bracing for something for a while, and it looks like, at least judging by Trump's words, we're going to start with steel and aluminum, but it does seem that it will not end there. But at some point, we may see more across-the-board efforts from him.
Kevin, who's the right person to de-escalate on the European side? We know the president wants to negotiate individually, but of course trade is set up for the Commission to take that space.
Yeah, it's going to be an interesting challenge for the EU, because obviously they do try to use their collective might to when it comes to trade. They do try to make it about the single market, but it may well be tempting for individual countries to try to cut individual deals. And Trump may enjoy the efforts of trying to split the bloc on trade. So, obviously for Ursula von der Leyen, the Commission president, as well as the Trade Commissioner Maros Sefcovic, they're hoping to be able to hold the bloc together. They've got a set of retaliatory plans that they've been drafting and working on. And they can scale up or scale down based on how far Trump goes. That's sort of the current plan. But obviously, once things are in place, if specific industries, specific sectors are hit hard, there could be a lot of pressure for individual governments to seek their own deals.
Thank you both for joining us. Laura Cooper, global investment strategist at Nuveen, and Bloomberg's Kevin Whitelaw. Coming up, we talk inflation and the ECB. This is Bloomberg. ECB Governing Council member and Croatian Central Bank Governor Boris Vujcic has told us that market expectations for 3 more ECB cuts this year are reasonable.
In our projections, we don't have tariffs assumed, and it's, as you know, big uncertainty these days. We don't know what's going to happen with it, but for the time being, we are seeing the economy growing, not strongly, but still recovering in 2025, with the inflation rate coming down, as you know. And unless we get other news, this is where we will stay, I think.
But what you're telling me is very true, but also it means there's a lot more uncertainty. That also the rate path ahead, but also I guess the mistake from a central bank could be more likely in this kind of scenario. That's for sure. There is absolutely much more uncertainty these days. Uncertainty is not good, as you know. In itself, uncertainty leads to probably slowing of the investment decisions, slowing therefore of the growth. But I hope again that in a few weeks or months we will have a clearer picture and that the uncertainty will be reduced. Governor, what do you make of the rate path or the market expectation of the rate path being 3 cuts of 25 basis points this year? Yeah, now it's 3 cuts by the end of the year. I would say that from the point where we are at the moment and what we know with all the data that we at hand, it's not unreasonable expectation that we're seeing in the markets. But again, we are now at the
I would say, a sensitive point in time where we do expect the inflation to start to come down, particularly services inflation, which has been stubbornly high, as you know, whole last year and basically since before that, and we will see.
Come March, with your expectations in March, we'll have also a clearer picture of the possibility of a recession because of extra tariffs from the U.S.?
Yeah, I think that March, April, we're going to get a clearer picture, both in terms of the data, again, particularly on the services inflation in the first quarter, but also I hope that the uncertainty around possible trade restrictions will also disappear or at least be reduced. That would be good for everyone, including us central bankers.
Governing Council member and Croatian Central Bank governor. Now, coming up, we'll be live from the AI Action Summit here in Paris, speaking to Deepmind Technologies Chief Executive Demis Hassabis and Google Senior VP James Manyika. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Paris, and these are your top stories. Donald Trump broadens his trade salvo, threatening some of America's biggest trading partners as he promises 25% tariffs on steel and aluminum imports. The dollar rises, but stocks mixed in a muted response to Trump's latest tariff threat as traders assess the impact. Plus, shares in BP jump after Bloomberg reports that activist investor Elliott has built a significant stake in the struggling British giant. Now, the French president is set to announce a major investment in artificial intelligence projects over the coming years, with companies and funds among those pledging to spend more than 100 billion euros. Now, this comes as world leaders and tech giants meet in Paris for the AI Action Summit, and Bloomberg's Tom McKenzie is there. Hi, Tom.
Fran, good morning. You talk about tech giants. Well, I have two senior leaders from Alphabet standing right by for a conversation right now. Demis Hassabis, of course, the CEO of Google DeepMind, and James Manyika, Senior Vice President at Google. Thank you, gentlemen, for both of your time on a busy day. I know for you and the team. There's a lot of topics to go through. Let me start with Deepseek and the impact, Demis, to you. What have you and the team found? Does it support, do you believe them, essentially, when they say that they trained a model that has similar capabilities to Gemini and ChatGPT, but at a fraction of the cost, $6 million, and older chips? Do you believe them?
Well, look, first thing to say is it's a very impressive model, a very impressive piece of work. I think the team is probably the best team that I've seen come out of China. So that said, I think a lot of the claims are exaggerated and a little bit misleading. So first of all, when you report how much it costs to do a training run, they seem to report just their final training run, which is actually a fraction of the cost it normally takes to explore and train and do all the tests beforehand before you do your final run. So we think that's been sort of underestimated. And then the other thing is they seem to have relied on some Western models to distill from or to basically fine-tune against the outputs of. So you have to sort of factor that cost in as well. And then finally, it's an impressive piece of work, but we don't see any silver bullet new technologies or techniques that we hadn't seen before or hadn't invented before. They've just applied it very well. So it's impressive, but it isn't some new outlier on the efficiency curve. For example, Gemini is more efficient than Deepseek in terms of its training to performance or its cost to performance. We just don't talk about that very much, but it's actually more efficient on the Pareto frontier of cost to performance.
James, to you then, and the company Alphabet's promise, or at least plan, to spend about $75 billion on capex, data centers, on chips, on H100s and probably Blackwell as well. Does any of that change the spending plan for Alphabet? Do you scale back the spend as a result of the efficiencies that you're pushing through with Gemini, but also that have been illustrated by Deepseek?
Well, no, it doesn't, because we're very excited about the potential for this technology. I mean, the amount of progress that we're seeing and the opportunities are extraordinary. Think about what this is going to do for people, the economy, advancing science. You saw what Demis and colleagues just did with AlphaFold. And think about the things we can tackle to improve massive pressing challenges in society. So the potential that we see is extraordinary. And I think at some point it's worth talking about what this could mean for economies and for productivity growth. That's what we're excited about.
Okay, so the investment still makes sense. Demis, we're looking at the US pushing through with Stargate, 100 billion initially, pushing up to 500 billion. Exclusively, it seems, data centers for OpenAI. Does that give OpenAI and Sam Altman an unfair advantage?
Well, look, we'll see what that actually transpires to when it gets built. But just to echo what James said, compute is still very much a critical part of what the infrastructure needed for AI, not only for exploring new ideas. If you're innovating at the frontier, you have to experiment at scale. Otherwise, the results of the experiment don't necessarily hold at the final training run scale. And also, we need it we're seeing incredible demand for models like Gemini 2.0 models, and you need a lot of compute to serve that, which of course is what we've always been after. And then the final thing is, with the advent of more thinking models, what's sometimes called thinking models or inference time models, actually the more compute time you spend at the point of processing inference, you get more powerful and better answers. So actually, for all of those reasons, you need probably more compute than ever.
Okay, sounds like NVIDIA is still in a safe position there.
Well, and also we're very happy with our TPUs, of course, as well. So
yes.
Google, and we take advantage of our own infrastructure stack as well.
So you don't want to be overly reliant on NVIDIA. You have your own infrastructure stack.
No, and also keep in mind that our current generation of TPUs, the sixth generation, is 4 times more efficient than the last 2 generations. So we continue to push that frontier as well.
Okay. In terms of the productivity gains, James, when do we start, for our viewers, for investors, a key question remains ROI, return on investment from AI. When do we start to see broad-based productivity gains as a result of this technology?
I think it depends on all of us. So, look, we see enormous potential. There have been lots of estimates from McKinsey, Goldman Sachs, and all these people estimating these huge productivity gains. It's going to depend on a few things. First, adoption. We know from previous rounds of technology that until you get the large sectors and economies and companies in those sectors adopting and using these technologies, it doesn't happen. Second, we know that's going to be pretty important to focus on productivity-enhancing use cases in companies and organizations. It's not enough for people just to play with these technologies. Otherwise, we're going to have another solo paradox. And it's also going to be important to actually empower workers with these tools to be able to use them productively. So until those things happen, we may not see the gains.
You have experience in policy as well, formerly at the Obama administration, serving with the Obama administration. Was Trump right to cut and slash AI regulation in the US?
Well, we've always said AI regulation is important. It's important to regulate well. So regulation is going to be very important. In our minds, regulations should do a couple of things. First, it should address all the risks that we see, but should also enable the things that we want. And so one of the key things we hope happens with regulation is that it's focused. In other words, focus on applications, focus on gaps in the existing regulations, focus also on the particular use cases and sectors. And we also need some coherence. We're here in Paris. Yeah. We don't need a patchwork of regulations around the world. So the more we can get coherence, that's going to be important.
We're a long way from that.
So, I'll say one final thing, though. It's got to be balanced. I think balance, again, between addressing the concerns and risks, but also enabling the innovation, the productivity that we all hope will happen.
Demis, how challenging is it to make it? The EU AI Act is coming to force this year through next year, and then the US is basically scrapping AI regulation, at least at the federal level. How challenging does that make it for Deepmind?
Well, look, I just echo what James said, is we've got to get the balance right between embracing boldly the opportunities, things like drug discovery, I think, helping with climate and energy, all the amazing things of advancing science, which is the motivation for why we started off this journey on AI, increased productivity. I think we're going to see all of those things and badly need them, but also addressing the risks that come with it.
How has your assessment of the risks changed? Yeah. Worst case scenario, best case scenario, Demis?
Well, there's 2 main things that I worry about, and one is how do we make sure we enable the good actors to use these incredible technologies for the benefit of the world, but also restrict access to would-be bad actors doing harm, repurposing those same technologies for harm. So that's a huge conundrum for the industry to try and solve. The second thing is, as our systems become more powerful, not today's ones, but in a year or 2 or 3's time, as we start getting agent-based systems that are able to accomplish tasks on their own, that we set them, addressing the kind of what's sometimes called AGI risk inherent in these systems, making sure they're controllable, they're understandable, they're verifiable, and all of that, in my opinion, the key part of that is international cooperation. We've got to do that as a whole, as an international community with academics, civil society, and industry and government all together, and that's what I think summits like this are for.
James, very briefly, before we let you go, you've changed the AI principles. Can we assume now that Alphabet is willing to work on AI weapon systems?
We've been very clear about a few things. We're very focused on applications of this technology where the benefits far, far, far outweigh the risks. We've also been very clear that we're going to stay consistent with international law and fundamental human rights. Look, we want to focus where we have unique, distinct expertise. The incredible scientific work that Demis and our colleagues are doing, advancing productivity use cases, that's what we're going to do. We're also going to continue to make sure that our product policies, as well as our terms of use, continue. That's what we're focused on.
James Manyika, thank you very much indeed, Senior Vice President of Google, and of course Demis Hassabis, CEO of Google DeepMind. Thank you both. Back to you, Fran.
Tom, thank you so much. And of course, that was a great conversation. We'll see what comes out of the AI summit. We're expecting quite a lot of money actually going towards investments. And then, of course, we have JD Vance, who arrived in Paris a short while ago, staying just a couple of minutes here from the office, from the Paris headquarters for Bloomberg. And then we'll see what message he also brings to those world leaders gathered at the Grand Palais. We'll have plenty more from the AI Action Summit in Paris. We'll bring you interviews with guests, including the French finance minister, but also OpenAI's head of policy. Coming up, BP shares jump as activist investor Elliott takes a significant stake. We'll bring you the details next. And this is Bloomberg. Well, BP shares have surged the most since 2020 after activist investor Elliott built a stake in the company seeking to end years of underperformance. Now, for more on this, Bloomberg's Will Kennedy, senior executive editor for Energy and Commodity, joins us. So, Will, thank you for joining us. Why does Elliott see an opportunity here now?
Its understanding, its idea is that BP has significantly underperformed its peers, other oil majors. If we look at the last couple of years, BP shares have fallen slightly, whereas Shell, its most important rival in the UK, is up more than 30%. Elliott presumably believes that's due to a misguided strategy on the part of management, and that by shaking things up again, they can close that valuation gap and take advantage of what remains a strong underlying oil and gas business.
So how can BP now respond?
Well, we don't know. They're not saying anything, but this is an important month for BP and its CEO, Murray Auchincloss. They have full year earnings tomorrow morning at 7 o'clock. We expect those to be in line with the rest of the industry, fairly weak. Refining margins have fallen back and putting pressure on earnings. Perhaps more importantly, they have a strategy capital markets update on February the 26th, where he's going to unveil his thinking on strategy to investors. That takes on even more urgency now after the Elliott news, and we presume that Elliott will be speaking with BP in the days ahead about what it wants to see from the board and the management team.
So, Will, there's so much talk, of course, about these steel tariffs. Does that impact commodities in general?
It adds to the uncertainty in markets. Clearly, this is tariffs coming back for the second time in a little more than a week. I think people will probably be focused on Canada. Canada's steel industry is very important to supplying the US and also its aluminium industry as well. So it has the potential to disrupt supply lines, supply chains within North America. I think the broader impact isn't huge in the short term, but clearly people will be thinking about whether they need to retaliate, and it adds to a music of more complicated policy, more complicated supply chains, and ultimately it will add costs to the world's commodity industry.
Well, thanks so much, Will Kennedy, there with the very latest, of course, on BP. In the meantime, the German Chancellor, Olaf Scholz, struggled to land the decisive blow he urgently needs on frontrunner Friedrich Merz in yesterday's TV election debate. Now, this just 2 weeks ahead of Germany's election, the 90-minute duel. Both candidates detailed their strategies for dealing with the unpredictability of President Trump. Let's get more with Bloomberg's Oliver Crook in Berlin. So, Ollie, good morning. What were the points of focus, and actually who won?
Yeah, so listen, Francine, I don't think anyone was really able to land, as you say, that decisive blow and sort of moving the needle for it. I mean, these are not known to be the most sort of charismatic and engaging and best communicating political leaders on the planet. And, you sort of contrasted to what you had in the U.S. election, where, like, the debates were very much based on vibe and not so much in numbers. This was very much based in numbers and not so much on vibe. So what we really got at the very beginning of the debate was a focus on migration. This is obviously one of the points that is very important here in Germany in this election, particularly with the rise of the far right, the anti-immigration AfD party. And basically, Scholz trying to highlight very early on that Merz was willing to vote with the AfD, breaking all of the taboos, and basically implying that Merz would be willing to enter into coalition with the AfD, a fact that Merz, of course, sort of vigorously denied. But again, the sort of main issue here, one of the elephants in the room, is the fact of the Donald Trump presidency that can have a particularly big effect on the German economy, particularly on the issue of tariffs. Have a listen to what Olaf Scholz, the chancellor, had to say about dealing with Donald Trump.
We should not delude ourselves. What the American president says, he also means. And some people are quite light-footed and say it won't turn out that way, which is why I think it was important that I was the first head of government in Europe to say after the discussion about Greenland, this is not how it works. We are defending Ukraine because we say that borders must not be moved by force. But of course, that applies all the more to our partners.
Recht für unsere Partner, die dürfen das auch nicht machen.
And of course, Olaf Scholz has some sort of idea of what it's like to work with Donald Trump, with the administration, and of course has some sort of track record, particularly with Elon Musk, only because of how vigorous sort of Elon Musk has been in his sort of denouncing of Olaf Scholz, that called him a fool and all those sorts of things. And it's really up to Friedrich Merz now, who's likely to be the next chancellor, to establish how he would deal with that question.
So how does Merz plan to take on Trump, and how are the polls evolving, Ollie?
Yeah, I think he's sort of hoping to get a little bit better in the graces of the Trump administration, particularly being with a more sort of right-leaning party with, again, a lot of criticism that's been heaped on Olaf Scholz by various members of the Trump administration. Have a listen to what Friedrich Merz had to say in terms of his own positioning versus Trump.
Well, he's predictably unpredictable. Most of the things he is saying now are not new. He has repeatedly spoken about them before. There are significant concerns on this side of the Atlantic about what else is coming, so it's all the more important that we, on this side of the Atlantic, are as united as possible.
Is interesting from Friedrich Merz is we get really a sort of strong message of European unity, particularly at times when he's sort of being accused of cozying up to the far right, particularly on the issue of immigration. He's decidedly not pushing that message when it comes to the Eurozone. Of course, the AfD wants to leave the Euro. This is a Friedrich Merz who's understanding the need of the Europeans to work in collective as the United States becomes a little bit more less reliable, I think, in the minds of many Europeans. As far as the polls are concerned, Francine, I think it is remarkable that despite all the things that we've seen in the last 2 weeks, despite the fact that we saw the CDU voting with the AfD, really upsetting a lot of people, the polls have not really moved that much. The CDU still leading with about 30 points, the AfD coming in at about 21, but really sort of marginal gains here. And these last 2 weeks will be absolutely critical to see if anyone can really get this, or if this is going to be basically the composition going forward, which could basically just create another sort of coalition of paralysis for Germany.
Ollie, thanks so much. Oliver Crook there with the very latest in Germany, of course, ahead of that election on February 23rd. Now, we'll bring you all the news, markets, analysis, and, of course, market moves as we continue to build up to the German election later this month, including a special program when polls close. That's on Sunday, February 23rd, live from Berlin. Coming up, we'll get the latest on the Chinese car makers BYD's keenly awaited update on smart driving technology and talk more about the impact of Trump's tariffs on the auto sector. That's next, and this is Bloomberg.
On February 23rd, Germany heads to the polls following the collapse of Chancellor Scholz's coalition. With the focus on the economy, migration, And geopolitical tensions, how will the German balance of power shift? Bloomberg Television has continuing coverage leading up to the election and will bring you the results after the votes are tallied with a special post-election broadcast. Tune in February 23rd, starting at 5 p.m. London time. Only on Bloomberg. Context changes everything.
My focus coming in, though, is going to be to spend time with all of our major stakeholders, and one of those will be our customers, and particularly our telco customer base, to understand how we're serving them well and what we can do to continue to serve them better and drive growth. The way I think about it is we have a strong and broad portfolio today, some of which is being touched by AI today. But I have also, the way I think about the AI cycle is it will be a super cycle. And much like we saw with the internet, it spawned the mobile internet, it spawned cloud. I believe we'll see that same thing with AI.
That was the incoming Nokia chief executive speaking to Bloomberg. Now, the Chinese car maker BYD is due to give a keenly awaited update on its smart driving technology in a few hours from now. The company had its best week since late 2020 last week, gaining 21% over 5 sessions. Well, Bloomberg's global autos editor, Craig Trudell, is here. So, Craig, what are we expecting? And especially in this new era of tariffs, how does that change everything?
Yeah, I think for BYD, for the most part, when people think about them and their brand, they think about sort of value for money and, the ability to sort of outprice the competition without, giving up a lot in terms of quality or reliability. But we don't necessarily think about them as a peer to Tesla on, say, driver assistance technology. And so I think, part of the reason for all of this optimism last week going into this event was, all it took was just the sort of, suggestion that this company was going to, be much more competitive in this domain. And, that could perhaps mean, better pricing for them in terms of, upcharging customers for a bit of additional technology, but also just perceptions, right? I think if they can change, how people think of their brand and, not as not just a maker of affordable cars, but also affordable higher tech cars, it only has the potential to add to the momentum of this company that has really been on fire the last few years.
Craig, I mean, is that easy to happen? Is the perception changing?
I think it will be challenging, and of course, it's important to note that there's different sort of regulatory challenges with this technology. I think they will have no trouble deploying it in China, just given their sort of standing in that market. I also think that I would be surprised if they tried to deploy hands-free or eyes-off systems in places like Europe, where those sorts of offerings are sort of more strictly regulated. But I do think it's important, for this company that, just getting on people's radar at all in terms of, especially over here in Europe, for all the momentum that they have in China, I think they are still struggling to get a whole lot of traction here in Europe.
Craig, thank you so much. As always, Craig Trudell, our auto czar. Up next, Bloomberg Brief, Danny Berger and Manus Cran in New York, and this is Bloomberg.